Hello friends, good evening. This is a quick update. If you have watched my yesterday's video, I had already cautioned that the Nifty Future charts were looking extremely bullish. Today, up to one 15 p.m., things were looking very sideways. In fact, there was hardly any volatility. Then from 2:15 onwards came a big sharp movement, and as you can see, with very high volume, and this was caused most likely by the heavy FII sellings. I have not yet checked the data, but I suspect that this is the typical FII selling that happens in the last 1 hour on a bearish day. But anyway, the reason for making this video is that if we go to the daily chart, you see volume wise there has been red candles 1 2 3 4 5 for last 5 consecutive day, and today was a sharp steep fall. Yesterday it made a doji candle, as I suggested, below the 17,260, which was the support of the super trend in the daily time frame. That was broken yesterday with a doji candle, and today, after being sideways with a very narrow range up to 115, it has made a decisive downward move. So now there is no other indicator is needed to tell us that we are now in a bearish zone. So the price action has confirmed what I had proposed yesterday. Are we? So where were we with the correction? Well, in the RSI 1-day chart, you see. Let me just make it 14. RSI 14. Below 40, we will be below 40. We will say the RSI crosses the 40. Then the momentum is totally with the bears. Below 50, the momentum, as I suggested yesterday only, the momentum was with the bulls, but now the bears have totally seized the momentum. As you can see, supported by this fall was supported by large volume. So now what? Now what I suggest is that please do not chase this fall. If you see earlier also, if we go to the super trends, let's make the super trend also chart. So when the super trend was taken out on the daily chart, this was associated with a big fall, and then there were consolidations. So that means because you see 1 2 3 4 5, just typical, this is almost action replay of what happened here. So the next, naturally, logically, it is a there is some short covering or profit booking, and then that was followed by a sharp up move, which of course was a bull trap, and again there was sustained selling. So once there is a sharp fall like this, we have to be cautious. Now I am saying, please be very cautious if you are now going to looking for opportunity. It is natural to feel FOMO. To be honest with you, I also missed the opportunity today. I was watching the market till 1:15 today. After that, I got caught up with something, and by 3:15 the action had happened, so I could not avail this fall. Now that happens, but the reason I am making this video is that let us not get caught up in this FOMO. As you can see, these things keep on happening here. As I am showing you, just a same story, 1 2 3 4 5 consecutive falls in the daily chart with increasing volume. Then bang, then the consolidation started with a pullback up to the RSI. Sorry, why I don't know. I keep on saying going up to the super trend resistance level. So Here many people can get trapped. So here if we short aggressively, some people may get trapped. So wait for RSI 40 on the daily chart to be broken. So ideally what happens is that if the RSI is taken out, so RSI is taken out, then it will try to go up. Then if it is coming down, then there are opportunity. But the point is that yesterday I said that be cautious in going long, especially with futures. Now today I am saying be cautious for going short aggressively with futures. So whatever money was to be made has been made from 18,100 to, so we have more than 1,000 point rally, right? So whatever money was to be made has been made, or has to be lost has been lost. So there is no point now being very aggressive. So I would now suggest that this is a stage where I would not advise going very aggressive even on the short side. So we'll have to wait and see what happens. Tomorrow will be important. If this RSI 40 holds, then probably we can have a sharp pullback, at least up to, if the super trend resistance here is pretty high. I don't think we are going 17,950 any soon. So let me make it hourly chart. So the hourly chart, the support is more, resistance is more realistic, 17,420. So let us see whether we do have a pullback rally up to that, and then what happens we'll have to see. So this is the purpose of making this video, that now whatever I suggested yesterday has happened. Now one has to be cautious before being short, because whatever rally was there has been played out, and we can also see that in the of course you can add more indicators. We can look at the moving average cross, 3 moving averages. So the red one is the 51 and the green one is the 200 EMA. Of course, these are EMA. If we make them SMA, simple moving average, and simple moving average, then what they call the death cross had happened today. That means the 55 day moving average has crossed below the 200 day moving average. So that is purely bearish signal. But having said that, this thing last happened, you see, this thing last happened in March during the COVID. Now there is no point getting panic, because by the time this cross happened, so the point that I am highlighting here is the following: by the time this cross happened, see where the market was. So it had, of course, and that was COVID time. After that it fell sharply, but then rose. So by the time this cross happened, the market had already significantly fallen, and it was that time, first time lockdown was announced. So therefore there was this unprecedented event. So there was this knee-jerk reaction, but the pullback was also equally sharp. So therefore these things are okay, but these kind of daily moving average cross nowadays in futures and options is not the right indicator to look at for taking trades. So right now the view is bearish, but we had already a very sharp fall with 5 consecutive days of fall. So I am cautioning now, please be very cautious. And I would not advise any short side trade right now, especially with futures. No short or no long, especially in futures. Let us wait and watch. There will be plenty more opportunities. And this is for sharing my views only. You are most welcome to take your own trades and manage your own risk. I am not a SEBI registered market analyst. I am a independent researcher, and this is for educational purpose.